What's up, everybody? Michael Silva here. A warning, this suggests a hard landing is coming. The deepest bond yield inversion since Volcker. That's what we're going to talk about in today's Stock Market Brief show. We're getting right into it today. The 10-year minus 2-year has just hit minus 103 basis points inverted, something that we haven't seen, like I stated, in the Volcker era. Now, if you take a look here, what's driving this? Well, the 2-year just went up to 5%. That's something that we haven't actually seen since just before the great financial crisis. Now, you got to think, with the stock market returns over the last 30 years being roughly around 9.89%, right? There's all kinds of different metrics out there, but we'll use that for an example. But if you can invest in short-term treasury securities or T-bills and get, almost this, not quite nearly that, but, 5%, potentially even 6%, risk-free without being in a volatile market, this is going to create a lot of competition for the overall markets. Now, we had Jerome Powell come out today, and what took place? Well, he had mentioned that it's likely to be bumpy. Okay, the Federal Reserve Chairman Powell warned on Tuesday that the central bank may have to push interest rates higher than previously expected in order to curb this stubborn inflation. Now, they talked about pivoting over to the 25% basis points, which take a look here, right? Now, where's the probability going to? The probability is now shifting from 25 basis points to 50 basis points. Remember, we're at 450 to 475, and now we're looking here as the probability is increasing to jumping it up to 500 to 525, then taking another 25, and then taking another 25, and holding it for the remainder of the year. And that can obviously create more volatility in these markets. And you can see here the probabilities of, so this was 1 month ago, we were looking at just a 25 basis point rate hike. And then you could see here 1 week ago, right? And then 1 day ago, and then just the current, you can see it dropped off like a cliff, whereas the 50 basis point hike has been increasing over here. So it does look potentially likely that we can be getting a 50 basis point hike. So that is something that we're going to have to pay attention to going into the March 22, the 22nd of March meeting. So what did the markets do? Well, the markets turned blood red. If you take a look at the S&P 500 heat map, every sector in the S&P 500, all 11, were down, and the ones that lagged the most was financials. Go figure that you get that big yield curve inversion, that big move, and financials takes the biggest hit. So we're going to have to continue to watch here what takes place on the 10-year yield, the 2-year yield. You can see here the PMO is starting to curl itself and flatten over. So if this starts to come off, but yet the 2-year remains elevated, we can see a deeper inversion, and potentially we might be moving into that next stage in the business cycle, more of into the contractionary phase, where we might see potentially TLT or long-term treasuries turn into actually a safe haven asset, right? If that's actually the case, we haven't seen that for a while, but that will be something that we'll be paying attention to in future videos. The dollar took off like a rocket ship today, up 1.21%, and that really helped drive down the S&P 500, as we've talked about this correlation plenty of times. Now, going into tomorrow, it's another big day. We have Fed Chair Powell testimony again. This is day 2. We have JOLTS data. Okay, so that's going to be an important one to watch. And then on Friday, we still have non-farm payrolls and unemployment rates, so a lot can happen in these markets. Now, we went over this yesterday, the levels, the hidden levels in the S&P 500. I'm going to re-go over some of this stuff. So yesterday we were looking at an expected move from 408.48 to potentially down to 450. And you can see here when Powell came out, when the speech was released here, you can see we tagged this with precision almost to the penny, and we saw a huge rip up. Okay, it was about a $3 move to the upside in SPY, and you can see if you anchor the daily VWAP, right, we didn't have a closing candle there, but it started rejecting from that point. We came back up, it was held as resistance again, and you can see the anchored VWAP is declining throughout the day, and we started to push down through it, almost creating a 2 sigma move here, bringing us down to the lower weekly expected move. And if you take a look here, this is Bookmap software. We came into that hidden area early in the trading session. So this was the trading session. So we had that big hit to the downside, and it came right to those hidden levels. And look where price action kind of hung out at. So this is why it's so important to know these levels, know the expected moves in the overall market, because if you knew about it and you were short, this could have been a good potential place to cover, and you could have looked to try to re-enter long around the daily VWAP there as well. Now, if I go into here, I want to bring this back up because we're looking at an expected move of roughly plus or minus $30 here in ES, which could take us to this white line right up here, or this white line down here, which is 39.60 to 40.20. But there are a couple other levels that I want to kind of mark out on the screen that showed up after the day closed. Okay, so the day closed right here. So this was today. Now we're moving into the overnight session, and we'll pay attention to these levels come tomorrow. But 40.35, right? So that's one level to watch as we see this, pretty big order spike come in after close. And then we also had that 40.20, which we already talked about. And then we even have 39.50 down here to 39.45 would be a level to pay attention to going into obviously tomorrow's trading session. Now, if we look at the SPY on the 15-minute time frame, I'm also going to give you the expected move once again for the price action on the SPY. This is just what the options market is pricing in going into tomorrow's trading session. So I'm going to keep doing this because we do have a lot of macro data drops and we have Powell talking. So it'd be important to know. Now, I want to call this out. We are below the week-to-date anchored VWAP. We're below the daily that took place today, so I'll be removing that on the screen. And we're below the month-to-date. Not only to mention that, we're also below a 5-day moving average that has been inclining, but now if we're below it, it can start potentially turning over. So we're below some very key levels taking place. Okay, I believe we're actually even below the year-to-date anchored VWAP now once again too as well, which I don't have on my screen. Okay, so we're below all of those, which means what? It means, hey, the bears clearly have control here, so I wouldn't be too fast to start adding a bunch of, money into the market. Can you get lucky and can it rip up higher? Absolutely, but wait for price action. At least that's what I do, is wait for price action to potentially build a base, confirm, get back above some key levels. Now, going into tomorrow's trading session, if, from this type of day, if we're going to get some continued action, I would think that we can go and tag the lower weekly expected move. The daily expected move is at about 395. So if we get outside over to this range over here tomorrow, I would be looking for an intraday play back up to the lower weekly expected move as far as a potential intraday scalp trade. So if we come back down into this area, that might be one that I'd be wanting to play. If we start moving up, just pay attention to this week to date anchored VWAP. That could be a potential area to short. Remember, if we come up to it and it's declining still, that could be a potential area of resistance. So not too much craziness going on into tomorrow's trading session from the looks of it. Just a couple of things that I'm paying attention to, which I just went over. A couple other things to call out is the RSI does have a subtle positive divergence and your PMO is starting to curl over. So if we do get a gap down tomorrow and these start to curl back up and we're back into oversold conditions, you might have bears here try to FOMO into it to try a stronger push. Be careful there because we could see some increased volatility where we can see a potential rip up higher and then all of a sudden the bulls chase and then all of a sudden we come back down. It's going to be a wild ride, but as it stands right now, bears are in control. Until we get back above that 5-day moving average, it'd be much nicer to be above the week to date, and it'd also be nice to reclaim that month to date. So once again, be very careful here. If I take a look at the S&P 500 on the daily time frame, you can see that daily candle was very gnarly, and this 3-bar candle is known as an evening star reversal, so pattern, right? So as the market moves up, then we have these 3 bars right here. You can see on this side of the screen, it is considered a reversal type pattern, so we'll see if it gets follow through. We have this pink box over here is something that we're paying attention to pretty much since right over here. And the reason why is because when it got back above this area of prior support, it was resistance, support, resistance, resistance, support. So it's a key level, meaning that, hey, markets might kind of gravitate back to those levels. And when we came back into the 3,900, we said, hey, it's possible that we come back up to 4,200 at some point. Why? Well, it's because that's also been acting as an area of support, resistance over here too as well. And then clearly we got that resistance. So it's been in this chop box between 3,900 to 4,200. As it stands right now, this looks like it can start stretching to retest potentially the 3,900 area to 3,950, the lower weekly expected move. But once again, we got to be careful. We're still above that 200-day moving average. We're on the 15-minute time frame, once again, below these key levels. So right now, bears, are in control. Be very cautious. That's all I got for you on today's episode, everybody. Have a wonderful day.